As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, welcome back to my channel. Intel has reported earnings. We gotta talk about Intel because Intel is down year to date about 15%, and after the earnings it went down 7%, making it its worst day for the year. Clearly, people did not like what was told at the earnings. So let's go into that and find out why it's like that. It has outpaced the QQQ though, that has dropped 23%, so it's not just Intel, but still let's go and see if it was justly so that Intel dropped so much in a single day. So firstly, first thing I want to say, when I look at the front page of Intel, you're going to see a lot of good news. They acquired Granulate. They have been researching, developing. They have invested $33 billion for a semiconductor research and development and manufacturing hub in in Europe. So they're working with Mobileye. So there's some news on that in the earnings call that I'll go over later. But generally, it feels like this company is busy, it's innovating, it's researching, it's preparing for growth in any case. So this year, we all knew, we knew this in advance. I made a video about this last quarterly reporting, and we knew that 2022 would not be a good year for the earnings. So when is this going to turn around? I'll come back to that later. Let's first look at the summary. So revenue down 7% year over year. This is nothing new. This is pretty much in line with expectations. So their non-GAAP EPS was earnings per share 0.87. So they have exceeded with 0.07, and they're reaffirming the full year 2022 revenue guidance. So they are fully on track to make everything happen like they planned. So let's go over their financial results. So they have put some new business groups or business units, and that makes it hard to compare with the previous quarter. So we see data center is a lot lower, but actually a lot from data center and AI went to network and edge. And based on these new things, we see that network and edge, Mobileye and Intel Foundry services are experiencing quite a good growth and have record revenues. So they plan to keep that up. Generally, in terms of revenue, it's not great, but it's pretty much in line what I expected. So I'm pretty much okay with it. Now I went through the entire earnings call, so you wouldn't have to, just to see what's interesting and what could have been putting the stock price down. First is good news. Mobileye has demonstrated its level 4 driving system in Jerusalem. They're working together with BMW. I do like BMW, to be honest. I am driving a BMW. It's the nicest car I've driven with up to this point. Yeah, I'm very optimistic about Mobileye here. We all know that Intel wants to IPO Mobileye at some point. Even at a valuation of 50 billion, is that really going to happen? I don't know, but level 4 is pretty hard to reach. A step from level 2 to level 4, that's incredibly hard. So if they manage to reach that, and if they manage to get it regulated, that's a huge step forward. So they state that they continue to believe they are just at the beginning of a long-term growth cycle across semiconductors, so it's really worth to invest in all the factories that they are investing in. They mention Arizona, New Mexico, Ohio, series of investment in Europe like France, Germany. So that's really great. They are investing, they're researching, they talk a lot about their new products, how they're even ahead of the roadmap for some of them. So that's all good. Now, what else do we find in here? And I think maybe this is a little bit why the share price went down so much. They're no longer shipping to customers in Russia and Belarus, although I have the feeling they're not really suffering, their business not really suffering that much because of it. but they also have component supply constraints as a challenge. So this is coming from China, and there is, of course, very, very severe COVID lockdowns in Shanghai. There is currently no signal that's going to improve. China is trying to combat Omicron, and I think it is seriously underestimating how infectious Omicron is. And they should, China should just, yeah, they should just put Pfizer with everyone, and just, yeah, go to more away from lockdowns. I mean, in Europe, we're all living free. We have no lockdowns. The intensive care is down. Hospital situation is a lot improved. So here, like, COVID is gone, and it's definitely going to stay gone until, yeah, we'll see how it is for the winter. Maybe we'll need a booster shot. I think, yeah, China should step away from its pride and go more for Europe and American produced vaccines. But yeah, that's not something I can affect, of course. So right now, as a consequence of that, Intel has to use its inventory to better match demand. Now, they're not really specifying if their competitors also have this issue. And I think, yeah, that's concerning. And I think that just this sentence, the fear of COVID lockdowns, yeah, I think that is really what drove the price down, the forward-looking statements, because that's what everyone is afraid of now. What's going to happen second half of the year? We're going to have a recession. What's going on with supply chain issues now? Is China going to lock down Beijing? So we don't know. And yeah, here Intel says they expect it will turn around second half of the year, but really they don't really know. And the question is, until China gives up its zero COVID policy, what is really going to happen? Now, long term, I do think it's going to be okay, but on the short term, I think 2022 could be a bad year. So looking at the outlook, I'm very happy because this was created by 50 analysts. So these are estimates of 50 analysts. So we see that 2022 is now slightly below what the analysts said in Q1, but not much difference. And what I'm very happy about is the outlook for 2026. That is new, so we can see an outlook for 2026. I hope you can see it on your screen like this. And for 2026, we see that, yeah, the revenue, the earnings is going to double compared to this year, more than double even. So yeah, right now we're trading at a price over earnings of 12. So if it double, it means we're going to trade below PE of 6. So can you imagine if everything that Intel says comes true, what is that going to do with the stock price? It can't be that we trade at a PE of 6. That just can't be. So probably we'll see a doubling of the stock price compared to its current value. And that's not bad. That's not a bad return over 4 years. But that doesn't mean like 2022, it's going to be a bad year. And when we're looking at the quarters, when it's going to improve, it's going to improve probably more like Q3. So that might be what we have to wait for, Q3 to 2023. From then on, and Q3 especially near the end of the year, from then on we're starting to see really a big revenue growth. So that's, yeah, that's a little bit what we're waiting for. Maybe end of the year, so Q3 here we also see an improvement, but we then see a little bit downside in Q1. So it's really the next year that could turn things around for our stock price. But it's hard. It's hard. Might already be this year in Q3 when those supply chain issues ease. It's very hard to predict, and that's why I'm just using this time that the stock price is low to accumulate Intel shares. So I started my position this year, and I plan to probably double it in the next few months. So I'm actually excited about the share price. As long as I'm buying, I'm excited about share price going down. When I stop, buying, then then I'm definitely not going to like it if the share price goes down. So guys, this this was my quarterly update on Intel. Just to recap, expect a year that's probably not going to be that well, especially Q1, Q2. Might get a turnaround in Q3, and I do expect like doubling or tripling of the share price the next 4-5 years. So thank you so much for watching, and see you next time.